Hello traders and welcome to the London Forex Broadsheets Daily Wrap of the Markets for Wednesday, October 8th. The euro moved mostly sideways in the Asian session, but after the London Open, the pair jumped more than 100 pips. The pair gained another 100 pips in New York after the coordinated rate cuts were announced. The support and resistance can be seen very well on the higher time frame charts. The pair has had a hard time breaking above 1.3700 for the past 3 days. The daily RSI for the pair bounced off the 30 oversold line and could be making a move higher in the next few days. The next major area of resistance could be the low seen back in August at 1.3850, while 1.3400 has held as support. The pound moved within a trading range of the last few days, unable to break significantly in either direction. The pair encountered strong resistance at the 1.7640 area, where it also topped out at the start of the week. The pair experienced downward pressure after some news items suggested the UK banking system is facing serious problems. After rising initially on the news of the rate cuts, the pair fell in New York and looked to finish below Tuesday's close. The pound fell again today as the Bank of England announced their interest rate cut a day earlier than scheduled to fall in line with the global rate cut. The pair stopped short of breaking through support at 1.7220, while 1.7500 held as resistance in early European trade. The Aussie fell 260 pips during the overnight session, totaling almost 900 pips lost since the new trading week began. The pair broke below the previous session low and was able to find a bottom at the TheLFB S2 at 0.6835. The pair tumbled in the last period as the Australian business cycle seems to have peaked but rose in New York after the rate cuts were announced. The Aussie's major support and resistance areas are easily seen on the weekly chart, especially since the pair has had such a dramatic drop over the past 2 months. The pair touched 0.6430 for the first time in over 5 years. Major support on this weekly chart can be seen in the 0.6350 area as well as the 0.6200 area. The loonie is trading nicely within an upward sloping channel. Major areas of support are seen in the 1.1165 and the 1.1090 area. Expect a pullback soon as the pair has tested the outer limits of the channel recently and could change directions. The Swissy fell 40 pips from the start of the Asian session to trade just above the TheLFB S1 at 1.1330. The pair also broke below the 1.1400 support during the overnight session. The pair declined in New York after the rate cuts were announced. The pair has broken lower through the 23.6% retracement but could find support at the 38.2%, which is in the 1.1180 area. The daily RSI is heading towards the neutral 50 line, which could cause some indecision. The yen broke below the 100 level during the overnight session for the second time this year. The pair fell 170 pips to the TheLFB S2 at 99.80 and moved significantly lower as the European session progressed in response to the US equity futures numbers. The pair traded as low as 98.59 in New York as equity markets moved lower after the rate cuts were announced, but was looking to finish the session well off the lows as equities staged a bit of a rally in the afternoon. In economic news, the Economy Watchers Index shows the sentiment regarding the Japanese economy is getting worse from one month to the next. The main reasons cited are the decline in job offers and the rising prices of household goods and gasoline. The volume and ATR for the yen have been astronomically higher as the pair reaches lows not seen since March, suggesting that there is a lot of market participation as well as speculation. On the daily RSI, the pair has managed to break out of the channel it found itself in for the past few weeks, which likely drew in more short orders. On the upcoming economic calendar, there is only one top-tier release scheduled for tomorrow. It will be at 0830 from the US and will be the unemployment claims. In Asian equities, the Nikkei fell a massive 952 points or 9.38% to close at 9203. This is the largest decline since 1987 and the third ever biggest drop in one trading session. The MSCI Asia Pacific Index fell 7.3%, losing so far 42% since the beginning of the year. In European stocks, the UK FTSE fell 238 points or 5.18% to close at 4366, while the German DAX tumbled 5.88% to close at 5013. On Wall Street, at the close of floor trading on the New York Stock Exchange, the Dow is at 9,258 after losing 189 points or 2%. The S&P closed at 984, down 11 points or 1.13%, and the Nasdaq finished trading the day at 1740 with a loss of 14 points or 0.83%. Crude oil for November delivery was down 1.5% on the day, and gold was up 2.18% to close at $905 an ounce. In Treasuries, the yield on the 10-year note rose 20.2 basis points to 3.708%, while the 2-year note's yield gained 15.1 basis points to 1.605%. Overall, after Federal Reserve Chairman Bernanke hinted strongly in a speech yesterday that a rate cut could occur on or before the FOMC meeting scheduled for October 28th and 29th, central banks in the US, UK, Europe, Sweden, and Switzerland announced a coordinated 50 basis point rate cut to their policy rates. The Fed also announced a 50 basis point rate cut in its discount window rate to 1.75%. According to the statement which accompanied the announcement, the FOMC noted that the pace of economic activity has slowed markedly in the recent months. Moreover, the intensification of financial market turmoil is likely to exert additional restraint on spending, partly by further reducing the ability of households and businesses to obtain credit. Inflation has been high, but the committee believes that the decline in energy and other commodity prices and the weaker prospect for economic activity have reduced the upside risks to inflation. In economic news, the National Association of Realtors said that in August, pending home sales on a seasonally adjusted basis rose by 7.4%, the most since October of 2001. In the year to August, sales rose 8.8%. All 4 regions showed monthly gains, with the largest in the West and the smallest in the South. This concludes the London Forex Broadsheet's daily wrap of the markets. We appreciate you making us part of your trading day.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.